More than a quarter of British people with debt will struggle under the burden of rising costs when interest rates rise, according to a new survey to be published today. Some 28% of UK citizens in debt believe the effect of a hike will threaten their financial stability, the International Savings Survey buying will show. The rising tide of consumer credit has been a central concern of the Bank of England in the last 2 years, with 9.5% annual growth in consumer credit to over £207 billion in December. Read more. Lloyds' ban on credit card Bitcoin purchases is the right move. The UK is also among the European countries with the highest proportion of citizens with no savings whatsoever, slightly above the EU average. 1 in 8 British households has debt from a personal loan, while credit card debt is the most popular form of unsecured debt, excluding mortgages and car purchases, with 27%. Meanwhile, 13% have an overdraft from their bank, 7% owe money to friends and family, and 8% of households have student loan debt. Read more. Consumer debt growth is not a new subprime bubble, say WACOG's James Knightley, chief international economist at ING, said, "The global economy is growing strongly and we suspect inflation pressures will gradually rise. The majority of central banks target inflation when setting interest rates, so we believe households are right to start thinking how they will manage their finances in an environment where borrowing costs are higher." However, central banks are aware of the threat, he added. The Bank of England has over the last 2 years tightened its macroprudential policies to try to stop banks from extending too much credit to vulnerable borrowers, at the same time as keeping extraordinarily loose monetary policy. Read more. Debate. Is Mark Carney right to say we are not in a consumer debt bubble?